Hello, fellow traders. Tis I, the Rumpled One. It is Monday, June the 4th, the year 2018. Let's talk trading. Why you do not get better at trading, part 9. Usually, on the previous day, I think what I'm going to do the next day as far as these videos. And I was going to do one thing, but I've decided to do something slightly different today. Because I think I might have mentioned this earlier. I watched a video, another trader's video, and they said to trade what you think, not what you see. That's totally opposite of what I've been saying for over a decade or a couple of decades. If you can't see it, how can you trade it? You don't trade what you think, you trade what you see. Now, maybe I didn't quite understand what they were saying. Maybe what they were saying is okay, you look at the market, you develop your trading plan, and you decide maybe what you think's going to happen. So, for example, if we look at the monthly chart, maybe, just maybe, you think that when price opened here and it got above the candle top here, which was the previous month's open, that you would go long. And right now you'd be up, 15 pips. So maybe that's what he means by trading what you think, as opposed to me, it could mean the same thing. I say trade what you see. You see price approaching the line. We got a green monthly candle. You go long at the line. Now you're up. So I don't know if that was a subtle difference or not, but as I always said, the market moves too quickly for you to think. You have to do all your thinking ahead of time. You know, the battle should be won before you place the trade. You should already know pretty much what your plan is and what you're going to do when price hits that point or that area. Then it's just that simple. So, as always, I say trade what you see. Now, that being said, there's a difference between seeing and trading the interpretations of what you see. So, it's something I did a long time ago. I posted a naked chart. All it was just candles, and I asked people to tell me what they saw. And they were talking about support, resistance, trend, supply, you name it. I said, no. What you see are a bunch of green and red boxes with some lines sticking out at either end on some of them. That's what you see. Everything else is your interpretation. So you have to be careful about that. Because unfortunately, once we start learning these things, they're really hard to let go of, and we stop seeing, we interpret. It's kind of like almost everything in life. You know, I think I did a video, the secret of life or the key to life is that it's never the thing, it's what you associate with the thing. So in trading, when you see certain candle patterns or configurations or formations on there, it's not the formation, it's how you interpret it. That's what causes the action. And one action that should always be is your money and risk management. Did you like that segue? You were wondering, how is it going to get to this screen, right? So, you're going to look at your portfolio size, how much is in your account, and you're going to decide how much of that you're going to be willing to risk on the trade. Just remember that. And we've already looked at the monthly. Now we're looking at the weekly. And you can see here on the weekly, it dropped below. It went above and then came across below last week's open. And we're into last week's wick zone, this huge, huge, huge wick zone. And you can see here we're right around the 109.50 psychological. If I remember correctly, yesterday we were kind of at that point too when I made yesterday's video. And you can see here all but one have filled. So I'm glad there's at least one or two of you out there taking advantage of the weekly gap that I've taught, because you can see here there's just money to be made. And it's very simple. I mean, you can almost just do that Sunday, Monday, and Sunday, Monday, you could be done trading for the week. And we shift down to the daily. We can see there was a slight breakout there. Somebody would call it a false breakout. Nope. If it goes over by a point, it broke out. And you can see a range. We've got some nice ranges here. A couple pound pairs. Looks like the Australian pairs have definitely done some ranging. I wonder what happened there. I'm just curious. Take a look. Haven't looked at the Australian dollar in a while. I think it was around 77 a week or so ago. I think I might have mentioned that. Wow. There must have been some really good news with the Australian dollar for that. But see, once again, forgetting about the news, if had you had a buy right there at 75.72, you'd be up about 80 pips right now. So that would have been a very nice trade. Once again, just trading these simple horizontal lines from the previous candle. And we're looking at the yen, and here we have a buy zone trigger right here. Profit, buy zone trigger here, profit, buy zone trigger here, profit. Sounds like a broken record, doesn't it? And you can see the pivot point fade. It got close, but not quite. But once again, if you remember, see, that was good for about 14 pips. So if you took any of these here, there was chance. See right there, there was profit. Actually, that's not sell zone. Sell zone's here. So, but if you wanted to take coming out of the buy zone the other way, trading toward the pivot, you see there was opportunity to put some pips in your pocket. So that pivot fade is still on for today. Rat zone, not quite. 39 pips, you can see right there. And once again, the pivot fade didn't happen. Price action. Here we go again. 3 ball, red at the line, short. 2 ball down here, green at the line, long. Profit to be made. Nothing difficult. Does it work every time? No, doesn't work every time, but it works enough times that if you apply proper risk and money management, you will come out ahead of the game. Simple trade, just trading at these horizontal lines. More horizontal lines, once again, from the previous session. We're looking at the daily here. And these are the hourly candles, green at the line, profit, red at the line, right there. That was a scratch, some profit, and some more profit, profit there. And all you Harry hindsight people, well, why don't you just get in the game live and you can see it works live too. And the wick zone, here we go, in and out of the wick a few times there, giving profit. There we go. We've got the holo zone here, holo zone here. Once again, profit. You can call it Harry hindsight if you want, but we do this every day, and you can see it works every day. And I just flipped over to this portfolio, meaning, when you hit the file button and you can click on portfolios to line up my videos. There we go. And the IRB lines, there was profit there, profit there. didn't quite trigger here, so you shouldn't have taken that trade. Don't rush it. Just like right here, don't rush it. Make sure it actually hits that price you want. I know it's tough. You just want to get in that trade. You just can't wait to make profit. But it's a waiting game. And once again, the missed pivot for today. Didn't miss by much, but it's still a miss. You can see here 0.36, missed by 3 pips, rounding. Now, I kind of teased you guys a little bit yesterday, but I'm going to show you the indicator now. My return bars. And I've got one that I just thought up this morning. It's even going to be, I'll have to code it up, and it kind of works the same way, but let's just focus on this one. Return bars. What's the idea? Well, what I believe is, based on observation, and I'll have a new indicator to prove it soon, but you see, anytime you get a big candle here, and this is M1, so right here, this is about a 4 pip candle. I think that's what I've got it set at. Where is it? Return. No, 2 pip body threshold. So any candle over 2 pips on the 1 minute gets this orange bar through it. Now, what do we do with that? Well, you see here, this is closed. You see how price returned to the open of this candle? Now, it took it a few minutes, but it returned. You see this one here? It took it a couple of minutes, it returned. You see this one, here's the open here. You see price returned back. And you see this one right now, we've got a live one. So, will price return to 109.514? That's what I would be wagering on, in the sense that it seems to happen on a regular recurring basis. And it's just that simple. So we've only got a couple minutes left in this video. I don't know if price is going to return within the next minute or two. But for those of you who want to keep score, just write down that price, 109.514, and note the time. And let's just see if price returns here before the end of the day. It's just that simple. There's nothing more to that. But it really does seem to happen on a very frequent basis. So what's the trade? Well, once you see this candle, do you immediately short? No, you wait for a trigger. You see we got a 2-ball. So using the spread dots, I'd wait for some selling to happen. And then, actually, I'd probably, wait for like a 2-ball or 3-ball. Wait for some selling. There's a 3-ball. Now wait for some selling and see if it comes all the way back down. Maybe it does, maybe it doesn't. But that's how I would trade it. So you can almost eyeball these, and that's why I put the I just wrote an indicator, because I kept looking at that. I'm thinking, there's something there. And I've run this across just about every time frame just to see. Now, of course, you wouldn't put a 2 pip limit on a 5-minute chart. It would be too many bars. So that's why I run the frequency distributions to see exactly how price moves. Now, just to let you know, there was another bar. I think I was looking at it on an M5 chart, but I'm thinking price is going to hit 61 before it returns. But we'll see what happens. So I'm going to trade what I see, because remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.